and welcome on Watches TV. And today in our club space, we had the pleasure of having Olivier Muller, somebody who's been in the industry for a few years, let's put it this way, involved in brands mainly, but today working as a consultant, consulting brands, but also kind of a co-author of this very important report now that has become kind of a reference in the industry, published by Morgan Stanley, the bank, and summarizing a little bit what is happening in this industry. This year's edition, obviously extremely interesting. Everything is booming, so it seems. But first question, before going into the numbers, can you explain us a little bit how those numbers are being pulled? What is the methodology behind this?
Yes, thank you. Thank you for having me, and thank you for asking these questions, because we have quite a few people who sometimes don't understand what we are doing and how we come up with all those figures. The fact is that the watch industry is a big black box. It's unlike fast-moving consumer goods where you have panels and you know how much you sell to whom, etc., until the end consumer. In the watch industry, we have none of this. The only thing that we have are expert figures, and we do have on some markets sellout data. So it's quite a painful work to get numbers, to verify numbers. What we do, in fact, is that we have quite an extensive network, and we try to triangle the numbers that we get officially. We have the expert figures of the Swiss watch industry, which are done by the Swiss Watch Federation. And we have what the CEOs tell us in the media, which sometimes is more or less far from the truth or near the truth. And we try to build up a database where we try to find out if the figures that we have are making any sense. So it's primary data and a lot of analysis and secondary data that we get on our own.
So overall, 2021 is yet a new record year. Apart from, 2020, which was a very strange year, we've done much better than 2019 in terms of, and this is something we've already mentioned a few times on this channel, in terms of the monetary aspect of the business, in terms of production volumes. Things are not so good still. The numbers are generally going down in terms of the number of watches produced in Switzerland. But coming back indeed to the amount of business generated by the industry, 2021 record year.
Yeah, it was a record year, and it was a very interesting year because after 2020, which was a pandemic year, I was very keen and very interested to see how the whole industry would restart. And to my, how shall I say, I was greatly surprised to see how fast and how strong it restarted, especially in the high end of the market. And when I was talking to some people in the know already during 2020, they were having terrific months. I can't give any names, of course, but some brands already did record months in 2020. So 2021, when we got back into a little bit a more normal life, which is only the case now, more or less. People restarted very quickly to regain on the business. China helped a lot because the Chinese controlled very quickly the pandemic, reopened the stores, etc., and we all know that it's a huge market, and if China goes well, the Swiss watch industry goes well. So to my great surprise, the recovery was much quicker and much stronger than I would have expected. And as you said, in terms of values, we had an exceptional year. In terms of volumes, we are still lagging a lot behind, even though we regained 2 million units compared to 2020.
To 20, yeah, but that was obviously very, very strange.
Very low.
But
yes.
I remember in 2020, people were saying, well, since people are not spending, they can't spend, so there's a lot of cash that is going to be accumulated, and then once things open, they're going to spend it and say, okay, that sounded very nice and positive. But I think it goes a little bit beyond that, isn't it? Why is this watchmaking so crazy today?
There are many parameters which play together, and one of which is a lot of money was earned with cryptocurrencies, and which was just poured in luxury goods overall, art, collectible cars, collectible watches, and all of a sudden, many people discovered watches as being quite a reliable investment vehicle. They discovered that there were brands like Rolex or Patek Philippe, not to name them, which are bearing quite some potential towards the end. But currently, I'm a little bit questioning if we are not, if we didn't arrive with a bubble, because when I'm seeing some prices, I'm getting a little bit afraid that at some point it might stop. But overall, a lot of money, a lot of liquidity overall in the world, because all the governments poured in a lot of money to make sure that the economies did restart. So too much liquidity needed to be invested. Of course, real estate was one thing, but once you have sold all the houses, people turn around and say, what do we do next? We buy cars, we buy art, we buy watches. And I think in 2020, end of 2020, we still had a lot of potential of recovery potential with the values of collectibles, of vintage, but also secondhand and new watches. And to say also a positive thing, some brands manage to reconnect with a younger generation of watch buyers. That has also to be said. It doesn't come all on its own. It's earned somewhere. So there is a lot of work being done there. And all this together created a boom, which honestly, I'm a little bit questioning, but it's good for us, and I'm happy if everyone can sell a lot of watches.
Us too. So we just talked a bit about the general trends, but now let's dig a little bit specifically by brands, and let's talk about the kind of the big players, the top players of the industry. What can you say about the performance of these players?
There is one, when we did that report, because of course we don't do it in 2 weeks' time, it's a work being made all over the year, and I was quite amazed by Cartier, who does an excellent performance, not only in jewelry but also in watches. We are talking only watches here with our numbers. I was amazed. Audemars Piguet. What can I say? They are growing and growing and growing, and it seems that this year they will do another record year because they have the 50th anniversary of the Royal Oak, and they are doing quite a good job.
But talking about AP, I mean, for a very long time they said, okay, well, they did like 40,000 watches per year, and that's it, and we will stick with that, and they stick with that for many years. Okay, this year they officially said that they will increase production a little bit. So how do you explain this increase of turnover with the AP then?
AP, it's a very clear vision of a brand which understood that they have to concentrate on their strong points. And the strong point is an iconic product called the Royal Oak, luckily for them. And then they launched, a few years ago, they launched the Code 1159, which created a lot of negative and positive, a little bit, reactions, but it seems now that finally the collection does sell as well. They have integrated most of their retail. They are still working with third-party retailers, but about 3/4 of their sales are done with directly controlled retailers. That helps a lot to capture margin, to know to whom you are selling what, etc., etc. Data is extremely important in our business so that you can monitor what you are doing. They did a great cleaning on the collection, that it has also to be said. I mean, the Jules Audemars was out, the Millenary is out, etc. So they are concentrated, they are very much focused. They have increased the average price constantly, steadily, with more precious metals, with more ladies' watches, with diamonds, etc. So they are doing a good job to elevate the whole brand. The communication was also a little bit adapted in a, I must say, in a very smart way. So yes, they are pushing more and more and more, and they are finally getting the reward of the work being done since 6, 7, 8 years.
But do you think then that the Code 1159, for instance, could be the Cellini of Rolex? I mean, the equivalent, or does it have more potential?
It's extremely difficult to establish something new when you have such a strong iconic product. Let's put it down to very basic things. Royal Oak, so Royal Oak and Royal Oak Offshore are 90% of their sales, okay, more or less, maybe 88%. So the Code 1159 has a tremendous potential, to put it positively, but it has also a hard life because the lover of AP, the investor, the flipper, they want only the Royal Oak. So pushing the Code 1159 is a hard work, but as I said, it's starting to pay off the efforts that they have been doing. So in the long run, it will be, I don't know, maybe one day 10-15% of Audemars Piguet sales, and that will be already quite something. They are at 45,000 in 2021, and the goal is to go to about 65,000. So they are quite ambitious, and the manufacturing capacities are being driven up. They have invested a lot of money on both sides. So yes.
Yeah, but I mean, even 60,000, considering what the demand is today, is
nothing.
They did nothing. I mean, they will sell it immediately.
Of course,
it wouldn't be an issue there.
Of course.
So talking about high volumes, just actually talking about turnover of AP, because something interesting or symbolically interesting, according to your report, is that now it equates more or less what Patek Philippe is doing.
Yeah, they are even in front of Patek. They are in 4th position, just behind Omega. They have overtaken Patek, which is now in 6th place behind Longines. Patek still has a little bit higher market share, and that is given by the fact that Patek sells mostly through third-party retailers, and that we, in our methodology, we calculate the market shares on the retail value. So we translate the consolidated volumes of sales into retail market shares. So the market share of Patek is a little bit higher, it's 0.6%, so as to say nothing. And I think by end of 2022, Audemars Piguet will have even there taken over. So yes, that's very symbolic because the two brands are very much competing. They have two strong iconic products, the Royal Oak, the Nautilus. There is also the Aquanaut, etc. We all know that Patek decided to take out the Nautilus 5711, created a lot of buzz. Mm-hmm. We are all more or less certain that Mr. Stern will launch a new Nautilus, at least I hope so for the brand. And the brand has still a tremendous potential, that is for sure.
But something indeed interesting is that Patek is much more of a kind of a multi-product brand. I mean, today, I mean, the spotlight has been put on the Nautilus just crazily. But I mean, you can't summarize Patek to the Nautilus.
True.
Whereas today, AP, you could kind of summarize it to the Royal Oak.
True. But is it a bad thing?
Oh, no.
I don't know.
There's one with a big crown.
I read, a friend forwarded me an interview of the CEO of Rolex dating back to 95, and where he's replying to a question by the journalist who is saying, but you are a mono-product brand, and he's replying, but is that a bad thing? More or less, I translate, but more or less. And they are still mono product brands. They have the Submariner Classic, Professional, and yes, okay, there is the Cellini, but Cellini overall is not much, and it's not the epitome of Rolex, to put it bluntly. So is it a bad thing? I don't know. I think that Patek has this advantage that they have that ladies watch the 24, the new one with the automatic movement. They do a good job there. They have the Calatrava. They have the high-end complications. And I think the decision to discontinue the Nautilus was taken because they were getting a little bit frustrated that everyone was looking only after the Nautilus and, worst case, the Aquanaut, and all the rest was...
Well, I remember Thierry Stern telling us in Baselworld like 5 years ago that he was already tired of this situation, and he was already mentioning that, yeah, we might kill it, and we were going, oh my God, no, and he did. Okay.
I replied, I must say I'm not a genius, I'm not visionary, because one journalist about 2 years ago asked me, about 2 years ago, he asked me, could you ever imagine that Patek will discontinue the Nautilus 5711? And I laughed and I said, no, trust me, never ever. And then it happened. Yeah.
Well, I mean, it's discontinued, but it's gonna...
Sure.
It's like 15202 with AP. I mean, it's didn't completely.
Exactly.
I mean, there's just like it's evolution, let's say.
Exactly, and the interesting thing at AP is that the launch, in fact, that many people haven't understood, that the launch of the Code 1159 with all those new mechanisms, all those new calibers, were also done to replace them on the Royal Oak family. Mm-hmm. Yeah. So it was a very smart move to develop all those calibers, produce them on not such big quantities that they would have been needed for the Royal Oak. So they could, slowly, let's say after 2 years, you switch over to the Royal Oak and you have a common family of all in-house produced movements.
I think that's something that people didn't really understand. It wasn't very well communicated.
It was not. Yeah, it was not, because it's quite a challenge to somewhere communicate about a new product family, which is very much about emotions, brand territory. We do the Code 1159 because of this and that and that. And at the same time, to make people understand that, in fact, it's due also to an industrial vision for your brand to have all the same calibers produced. And that's not a bad word, on an industrial basis.
No, absolutely. I mean, those are serious production numbers. I mean, you wouldn't expect just a little watchmaker doing that. No, it's not just physically not possible. So talking about big numbers.
Yes.
Talk about Rolex. I mean,
yes.
So, I mean, it seems that this time we passed the million mark of watches sold.
That's incredible. It's incredible. I am always amazed how strong the brands are, but then if I look on a rational side, sometimes I teach young students who are learning on marketing and luxury marketing, and I always tell them, you take Rolex and you see this is the total coherence, consistence of branding. Everything there is done the right way, okay? You can come say, I don't like the product. Okay, you don't like because it's not your taste. But when you look at the words that are being used, the images that are being used, the territories that are being used, if you have one product family, it's that territory. You are not going to find a Daytona on a sailing boat. Daytona is about motorsport. So when you look at all this, how currently the whole brand has been built up and how it's managed, you understand that sometime, anytime, you will rip off the benefits of all this. So Rolex, for me, is really the epitome of the currents of a brand. It's how you build up and you manage a brand. Nothing is done by coincidence. There is no improvisation. Everything is done because it has been thought about.
And been thought probably like 5 years ago.
Absolutely. Takes a long time, that's the downside, but then it's perfect.
Yes.
And one day I was in China, in Shanghai, with a gentleman with a gray beard called Laurent Ferrier, and we were invited by a retailer to visit something they had called the Rolex experience. And so we go into that showroom, we look at everything, etc., where they were explaining for the first time the whole history of Rolex, because Rolex always thought we don't have to explain, we are the best, why should we explain anything? Okay, so we visit the whole thing. Next step, we go into the brand, the monobrand boutique just next door. We visit the thing, Mr. Ferrier being recognized by all the sales guys, has his portrait taken by the lady standing next to him, etc. We walk out of the store, and I turn around to Laurent and I say, "Did you appreciate the collection?" And he says, "Yes, but that's all vintage models." I say, "No, Laurent, this is the actual collection." He never, that's a true story, huh? He never believed that those were the actual, but it's a bit the same watches like in the 1980s. Yes, exactly.
So talking about the next brand, which is kind of behind Rolex, but would love to be in its position, Omega.
Yes.
How are they performing?
They do well, but they have a hard time because they have such a strong champion in front of them. They do an excellent job. They have, the last 4 to 5 years, they have increased a lot their positioning in the US, so that allowed them to reduce the dependence from China, because Omega was always very, very strong in China. But that induced also that they got into, you know, when business is too easy, you are not making the efforts that are needed to diversify with your clientele, with your markets, etc., etc. So finally, they managed to increase their market share in the US. They have put a lot of energy the last 3 to 4 years, or let's say 4 to 5 years, into the Seamaster and the Speedmaster families. Which allowed them to be stronger in the US and on the European markets, which is good. It allowed them to have a younger clientele, but let's get back to your question. The fact is that the guy next to them is so strong that it makes all their efforts looking okay, but they are not just okay, they are great. I'm an ex-Omega, so I wish they would have even a better momentum, but I think they do a very good job. And the big difference, we were talking about Rolex just before, mono-product brand. Omega is a universal brand. You have 4 product families, very different. Seamaster and Speedmaster, you could say, okay, both sports watches, but then you have the Constellation and the Deville, which are very different. 4 different product territories where you have to communicate, etc., etc. So it's quite a challenge.
Mm-hmm, mm-hmm. So still in those big players, but it's kind of a UFO, and I will come back to them just in a second. I mean, it's Richemont, which is small but huge. I mean, it's kind of crazy. But Omega, part of the Swatch Group, Omega being kind of the locomotive for the Swatch Group.
Definitely.
Yeah. How important? What's the role of Omega within the constellation of the Swatch Group? Then?
Very simple. I put it bluntly because I just co-wrote a report, a financial report. Omega is more than 50% of the EBIT of the Swatch Group. So if you take Omega and Longines, you're almost done with the group. Then you have Tissot, who does a good job, but of course they don't earn as much money as the 2 other brands. And once you have added up the EBITs of those 3 brands, you are above the consolidated EBIT of the Swatch Group. So that gives you the answer. There are nice smaller brands within the portfolio of the Swatch Group. I think of a Hamilton, They are nice little brands doing a good job. Blancpain does a good job, but Blancpain doesn't have the potential to probably, at least that's my opinion, doesn't have the potential to sell one day for 1 billion watches. And then you have other brands which don't perform at all. My question would be to Mr. Hayek, do you think that it's doable to manage 17 brands? I have managed one, I'm not as smart as his managers are, but 17 is quite a challenge, I think. And the other thing is that Swatch Group is still an industrial group, which is a good thing for the group and the whole watch industry.
For the country, of course, yeah.
Of course, it's a lot of jobs, a lot of added value and know-how, etc., etc. But it's quite complex on the same side to push on the efficiency of your industrial facilities and on the brands. For me, there is something which doesn't go together.
You mentioned Tissot before, and personally I was kind of afraid for them because of being, directly hit against the connected watch type of market and things like that. But they seem to have rebounded a little bit. How do you explain what happened there?
I think they are trying to answer somehow. It's a very niche positioning within the smartwatches with the T-Touch Solar Connected, which seems to sell quite well.
Well, I was talking more in terms of the price range.
The price range.
Meaning that today for a young guy, you said, okay, well, I'd be more interested. Yeah, I see you. You're a young guy then.
Yeah, I'm a young guy.
Okay.
No, but I think they do extraordinary products at very accessible prices. I don't want to sell you my PRX, but if you look at this watch, it's Swiss-made stainless steel automatic movement, a very good movement, very fine movement, for 645 Swiss. So they have a huge success with that. The challenge for Tissot will get to get back to those volumes. There are huge volumes being made there. You need, to be always on the edge to push with new product initiatives, etc. It's very much different being at Tissot than at Omega. It's a challenge at another level. I think they do a very, very good job. It's challenging.
For sure.
Maybe they should do, but I'm not, that's why they call me Dr. Muller when they make fun of me. Maybe if I would advise something is do less, but do it more steadily and build up real product families like they are doing now with the PRX.
You've given a little kind of overview of the Swatch Group, but let's continue with groups as groups. And let's talk Richemont and LVMH, of course. Kering today seems to have said a little bit goodbye to the industry. But LVMH, how are they doing?
LVMH. So yes, Hublot is doing a good job. And they do an excellent job, I must say. TAG Heuer is having a difficult time. It's not that they are doing a terrible job, but they have very strong competitors next to them. And one of them is Breitling. Breitling does an outstanding job since 3 or 4 years. And that makes it hard for TAG Heuer to increase their volumes because they are just on the same price segments, etc. On top of it, they have Omega, they have a little bit of Longines on some products, etc. So they have a competitive environment which makes it hard for them. Mm-hmm. But it's a nice name. They have strong iconic products like the Carrera, etc., etc. So they would have the potential. I'm not so much convinced about the smartwatches they make. Mm-hmm. I never understood why someone would spend $2,000 when he gets an Apple Watch at $450. I never understood that strategy. For me, if you...
the ones they did with the Hublot, that's something different. For me, it's like kind of a gimmicky type.
Yes,
type.
Exactly.
That's different. But indeed, to install that as a proper collection is obviously
very difficult.
Very complicated.
Yes.
Yeah.
There was a very famous trade journalist called Mr. Ponce who once wrote that the war was over and agreed strongly with that. The war is over. We lost the war with the smartwatches. So the only thing where we can reply is trying to figure out niche positionings within that smartwatch segment. I mean, let's look at the numbers. Last year, we sold more or less 16 million watches for the whole Swiss watch industry, 15.7 to be precise. Whereas smartwatches, 80 millions. In 2016, it was 22 to 25 million. 25 for the Swiss. So, you know, at some point you have to reassess the situation and say, okay, I have to change my strategy and adapt. And if there are positions to be taken in niche positioning, then I do it. Otherwise, I have to stick to my conventional business.
So let's talk about Richemont, who's, I mean, not like Swatch, which is more like an industrial group, like we mentioned before. There we're talking more about brand management in a certain way. How is Richemont doing as a whole, and individually, who would you see there as being kind of the key drivers of this group?
Yes, I was amazed seeing the results of the different brands. But again, now I have to make a side remark, which is given by the way we work. No group has the obligation to publish any numbers at brand level. Even if they are listed, like Richemont, Swatch Group, or LVMH, they can just tell us this is the division of specialty watchmakers, which includes Lange & Söhne, IWC, etc., etc. So we have to figure out a little bit, but they give us some inputs. Overall, they do extremely well. There are brands like Vacheron Constantin who do an excellent job. I'm very happy. I don't know the CEO, so I am totally objective. He's not a friend of mine. He does an outstanding job. He has taken the brand back where it used to be, and I still think they have a lot of potential. They do really a good job. They are finally selling the overseas, which for a long time was seen a little bit.
Today it's so hot. Yeah, it's crazy. Yeah.
I think, of course, it's the trend of sports chic, stainless steel, etc., etc. But they do an excellent job at pushing at that. So Vacheron, kudos. IWC seems to be doing quite well. Panerai is a little bit in a difficult situation today. It does well. Right? It performs quite good compared with his peers, etc., etc. But somehow you have the feeling that they have lost a little bit the momentum. They have lost the connection with the Paneristi. They are questioning a little bit. Sometimes they have initiatives which are not so well perceived. I'm not going into the details.
Then you mean the travel agency part?
For instance.
Sorry about that.
For instance, okay. that was yours. Baume & Mercier, a hard time, but they have now a little bit regained. Baume & Mercier will probably never get back where it was 20 or 25 years ago, but they do quite an okay job. Lange & Söhne gained a lot of credibility with watch collectors. Mm-hmm. Fine brand. I think they would still have a lot of potential. I love that brand. Very, very fine products. And Piaget, it's
complicated.
Complicated. Yeah. Van Cleef is doing an excellent job. And finally, we have Cartier. And Cartier is, for me, just a phenomenon.
Powerhouse.
I mean, when you look again, Cartier has something which is very unique. And probably there are very, very few luxury brands which share that with Cartier, like Tiffany. It's where the value perception of the client is much higher than what the brand is actually selling. I mean, the entry level of a Cartier watch is 2,500 Swiss stainless steel Santos, okay? So for 2,500 Swiss, I get into the Cartier world. It's still a lot of money. I'm not saying it's nothing, but it's still a very accessible price point, even more so with small jewelry, etc., etc. And Cartier at all times managed to preserve that. And Mr. Vigneron, the CEO, is doing an outstanding job of being current through the whole brand. They are talking to younger people, to Chinese people, to Americans, etc., etc. The whole communication campaigns are just great. Really, very, very refreshing, very current with the brand's DNA. So yeah, they have now the challenge that LVMH in front of them is coming with another strong brand above, which is Bulgari, and underneath Tiffany. So they are being, challenged from both sides. But seeing the numbers, they do great.
Something interesting is that most of the brands that are in this top 5 the positions there are independently owned.
Yes.
What advantage does it bring them?
I will give a very simple answer. I think it gives you time. It gives you time to do what you have to do. Hermès, which is another independent brand, even though some part of its equity is listed, the CEO of Hermès once said, "We are not here for a quarter or a month or a week. We're here for eternity." And that I think makes a lot of difference. At Patek Philippe, they will never take decision for the next 12 or 24 months. You see that they're on a long run, as is Audemars and Rolex, of course. The Rolex has all the money, the time, the knowledge, the vision to do what they do. That's why they perform so well. I think that makes the difference.
You mentioned Hermès, and it's very interesting because I think also that they've reached this kind of maturity phase in a certain way. I mean, they've always been serious about what they do, but today I think with all those efforts, all these investments have been kind of better understood. Of course, I mean the appeal of the brand Hermès is just so huge by itself. But nevertheless, in terms of their product, I've been just talking about myself, where the H8 they came out last year.
Yes.
I mean, it seems to be like a huge success for these guys, and I'm very happy for them, of course. But how is the watchmaking division? What's the performance you think that they're achieving today compared to like 2-3 years ago?
I come back on the currents with the overall brand strategy. Before Hermès, let's say about 10-15 years ago, they had this very difficult positioning where they were looking at their watches like accessories.
Accessories, yes.
Okay,
yeah.
It was the entry-level accessory to create traffic in their own boutiques. You would sell an Hermès watch starting at 800 euros with a quartz movement, etc., etc. Then they switched to the mechanical. They did it in a more or less lucky way, buying into the Vaucher manufacturer, etc., etc. They did a good job, but then finally they understood, of course they are smart, they don't need me to tell them that, but they understood that their brand is such an epitome of luxury, of craftsmanship, of tradition, etc., that they couldn't have the whole brand here and the watches there. So they pushed up the whole offering of the watches and rebuilt the whole collections. If I could criticize one thing, if I look at the collection, on the men's side, it's very current, even the Haute Horlogerie with minute repeaters, tourbillon, etc. On the ladies' side, it would still need a little bit of cleaning because there are still too many SKUs. But I used to be a supply chain manager, so it's still, But they do an outstanding job. They achieved 73% growth compared to 2020. So still, in absolute numbers, they are far behind the top 5, but they are growing. Yeah?
Steadily going there,
Yes.
And the perception is evolving. That's nice. Okay, well, I mentioned before, Mille is like a UFO. I mean, it's like, what can be said?
Mille, I am sorry for using the term of epitome all the time, but Mille is a case study for marketing students to understand how you build up a brand. Because at Richard Mille, everything has been done the right way, right from the beginning. Mr. Mille himself, his business partner who is manufacturing the parts, the other business partners taking care of the distribution, they all do an outstanding job. And right from the beginning, you understand that they are, as Richard Mille said when they asked him, but Mr. Mille, how do you think you're going to sell a tourbillon at more or less, back in those days, 20 years ago, at 200,000 Swiss? It's more expensive than Patek Philippe. And he just replied, we are not compared with Patek Philippe, we are Richard Mille. So it's, the vision on having a brand which is not to be compared with anything else. The innovation, the avant-garde, using always new materials, to have a spectacular look, to have the racing machine on your wrist. That's all very bold and strong statements which attracted the attention of a certain type of clientele, of new rich people. And today they are selling, the average sales price is more or less 225,000 Swiss.
This is crazy.
And when you look, and even more impressive for me is when I see the resales value.
Of course, no,
on
that's
the grey market.
Yes, yeah, but that's very. I mean, for people that buy those kind of watches, it's reassuring in a certain way, even though they don't necessarily care, the first ones, because then generally you're rich enough. But then on top of it, you have this little cherry on the cake there, yeah. But
True.
This leads me also to, because already like 3-4 years ago, people were saying, but it's maybe a bubble, blah, 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 blah. But your numbers are just showing it's still growing.
Yes, and I'm quite sure on those numbers because anyways, we are sure on those numbers. They sell more or less 5,000 watches. They achieve 1.1 billion sales.
That's amazing.
I have also to add that it's, in fact, Richard Mille, it's different companies, but anyways, the whole brand makes 1.1 billion Swiss sales a year with a tremendous EBIT. So it's very profitable. The profitability of Richard Mille is comparable with Louis Vuitton and Hermès, etc., probably even higher. They have integrated the whole retail, so the 5,000 watches are sold through 42 directly operated boutiques. Some of them are 100% brand owned, the other ones are joint ventures. What can I say? Everything is perfect. You look at Richard Mille and you say the statements are bold, but they have a clear vision. You look at the product you like or you don't like. I think they are spectacular. Great mechanics. It's made by AP, ex-Renault Papy, because Audemars Piguet is a shareholder of Richard Mille. And
so to end up a little bit this discussion, what do you think what can be said about the state of the independent scene, which is doing extremely well also, very strong. Does it fall into your numbers or not?
No, not really. Not
it's so
really.
small, right?
Well, I can give you a few numbers. 5 brands are making up more than 50% of the whole sales. 13 brands are 3/4 of the sales. 25 brands are more than 90% of the Swiss watch industry, which in retail value can be valued more or less at 43 billion Swiss a year, at least last year. So, where are our independents, which we both love a lot? They do an excellent job, of course, but they are not quite relevant. Even if I add up a big independent like François-Paul Journe, we come up with about 1% of the whole industry sales and not even 1% of the volumes. So it's marginal. But the important thing is the image, the message they convey, the preservation of know-hows, etc., etc. They are important from that point of view.
And can you already say things about this year, about the future? Is there anything that you have in mind already? Do you see this continuing?
I hope so, and I would have been very confident until 2 weeks ago before the tragic happenings in Ukraine. But I'm still quite confident that the year will be great for the whole watch industry. I wish so, and it seems like it's going to happen.
Well, we all hope so. Well, thank you very much for being here.
Thank you for having me.
And if you're interested, this Morgan Stanley report, you can find it online here and there. And we will put some links on our website.
You're not supposed to.
Not supposed to, but I mean, we'll find experts or just little things. Don't worry about that. All right, thank you very much for looking at us. Thanks again, Olivier, and Viva Watchmaking. There we go. Bye.